Hi, I'm Steve LaFrance and welcome to our February update. A quick look at how markets started 2026, the major themes driving performance, and what we're watching as we move through this first quarter. January delivered a strong start. S&P gained 1.5%, setting a new all-time high, trading above 7,000 for the first time. What stood out most, though, was the broadening of market leadership. Large cap growth, last year's standout, actually declined 1.3%, while large cap value rose 4.6% and small cap surged 5.4%, also hitting new highs. After several years where a narrow group of mega cap tech companies, aka Mag 7, drove most of the market's gains, January showed a meaningful rotation toward traditional, domestically focused companies. Commodities were another major theme. Gold rose over 10%, silver jumped over 20%, and oil reached its highest level since last September. Investors leaned into commodities as a hedge against geopolitical uncertainty, policy risk, and a weaker U.S. dollar, which increases the volatility and speculative nature of these assets. International also outperformed. Developed markets gained 6%. Emerging markets returned 8.9%, helped by the falling dollar to a nearly four-year low. That currency move provided a tailwind for globally diversified portfolios. On the economic front, data continues to show a gap between how people feel and how the economy is actually performing. Consumer confidence fell to multi-year lows, and manufacturing surveys remain in contraction. But the hard data, retail sales, industrial production, and overall economic activity points to solid momentum heading into 2026. It's a dynamic we've seen for more than a year now, where sentiment is weak, but spending and output remain resilient. The labor market is cooling gradually, but remains stable. Job growth slowed. Job openings declined, but unemployment unexpectedly ticked lower and jobless claims stayed near historic lows. That combination supports the Fed's current stance of pausing rate cuts after 3 consecutive cuts late last year. The tone from the January meeting was slightly more optimistic, noting solid consumer and business activity despite the Q4 government shutdown. Markets now expect the next rate cut around June, giving policymakers time to assess the lagged impact of last year's moves. So to recap, market leadership is broadening beyond mega cap tech, which is healthy after such a concentrated run. And commodities and values-oriented sectors are benefiting from a mix of global uncertainty, improving economic conditions, and more attractive valuations. As always, our team will continue to closely monitor incoming economic data and evolving market trends to help ensure portfolios remain aligned with your objectives. So thanks again for your trust and confidence.